Welcome back to another episode of How to Make Money with Hard Money. I'm joined by my partner, Caleb Delgado, and today we also have our sales manager, Austin Hughes, in the building.
I'm back.
Second time back,
my
yeah,
friend.
second time on. I love it.
First time must not have been all that bad. Got the invite back.
There we go.
There you go.
All right, I guess today we're going to talk about, some loan extensions. We're going to get to know Austin a little bit better. Last time, I think we talked about some like specific deals and things like that.
Yep.
So today we'll chop up your background and what your role is with DKC Lending, and then get into some extensions that we wanted to chat about.
Yeah. Awesome.
A day of life in your seat, man.
Yes. So Austin Hughes, sales manager at DKC Lending now for almost over a year, right?
Yeah.
Been
I think just about a year.
just about a year now. And you were a loan consultant prior to that with DKC Lending. So why don't you give us a little bit about your background? Where'd you come from? What industry did you transition from? And why don't you take us away there?
Yeah. Thanks for having me for round two. So originally from upstate New York, funny enough, went to the same high school as David, was a college soccer player. After college, all I really knew was sports when I grew up. Grew up in a household that was filled with sports. Wanted to work in sports, had no idea what that meant, but got a job working in arena football, Albany, New York, for the Albany Empire. Was an account executive, making anywhere from 75 to 125 calls a day, trying to sell season tickets, group outings for businesses. Really did enjoy it. After that, moved down here, took an opportunity in the XFL with the Tampa Bay Vipers. Took a little bit of a step up, was one of the managers of ticket sales and experience. COVID hit, didn't work for a couple of months, then took an opportunity with the division of IMG Academy, NCSA, Next College Student Athlete. That was a service that NCSA had provided to assist student athletes through the recruiting process. So I thought it was really cool. My recruiting process wasn't all that smooth, and it was a service that we sold to, families, athletes that were looking for an opportunity to take their game to the next level.
You were hammering the phones at that business as well, huh?
Same thing. Was making a ton of calls, just talking a little bit about my background, my experience, and how people need to be educated on the recruiting process because it is extremely competitive.
Yep.
And especially with technology nowadays, it's really taken over the recruiting process. It's no longer that coaches just go sit at a field and cross their fingers hoping to find a good player. They're strategic about who they're going to see. So, 3 stints right there in sports, 2 with the professional sports teams, and then 1 with that division of IMG Academy.
Yeah, all sales backgrounds.
Yeah, grew a passion for sales. I think when I was in college, I didn't know that I was going to be in sales or wanted to be in sales. I feel like sometimes sales has that a little bit of a weird, some people come off as, you're a salesperson, and they get a little bit standoffish, but became...
Don't say that around Caleb.
Became incredibly passionate about it, and then had reconnected with David when I got down here. I started to shadow in the office, really fell in love with the environment in the office and the group of people that we have here.
You were shadowing in the office for over 6 months while working at NCIS, right?
NCSA.
Yeah.
I mean, I would come in usually between 8 and 2.
Right.
At 2, I would leave, go to the gym, and then I would have to be at my desk by 5 o'clock, and I was working from 5 to midnight.
Yeah, you're a night owl. So then, I mean, I think you closed a couple of deals being fly on the wall. I mean, and we told you at first, because, private lending, it's so nuanced, I would say, and being a real estate entrepreneur in general. And that's what you are. You're an entrepreneur. You're an entrepreneur within our DKC Lending branch, as is Enrique and Kyle and the rest of the team. But what was that transition like when you first came in? And I know at some point, I think you left your job and it didn't even tell us, you left your job and you're like, I'm in, and came full bore. So,
Well, you and I have had a lot of private conversations about that when you were making that transition.
Yeah.
So what was that like for you?
Like I said, my hours were 5 to midnight. So really for me, I just got to a point where I felt like I was missing out on a lot. And I'm in my 20s. So missing out on going to dinner when my family's in town, that's what was kind of the trigger for me.
Okay.
Wow, my parents are in town and they have to take me out for lunch and then take my sister out for dinner. I knew it didn't have to be that way and it wasn't going to be that way forever. I remember coming into the DKC office at first couple of weeks, first couple of months even, my head was bouncing against the walls. Like I had no idea what was going on, but really just, I know we always talk about leaning into it. I definitely leaned into it. I showed up every day. I spent probably way more time than I would like to admit sitting at Caleb's desk, just trying to take it in.
I remember those days right in front of me all the time.
Yeah, but it ended up working out. And there was a couple of deals that you guys had helped me through that I definitely stumbled my way through just to get an idea of what this was like. And I truly feel like I did start to fall in love with it. And again, I had a lot to do with the team that we have here and just the environment in the office. Surrounding myself with like-minded people was a huge part of why I made the jump. And it certainly was an uncomfortable jump. I mean, I went from knowing that I had a solid income at my old job to being promised absolutely nothing.
Yeah.
But I saw an opportunity to make more, but it was certainly a risk.
Yeah, no, I love that, and I think you grabbed it, no doubt. And and even after a year of being a loan consultant, you earned the opportunity to become our sales manager. So what is why don't you tell what is a sales manager and what's the difference from our loan consultant? I know you touch every file, so what does that look like?
Yeah, I mean the position wasn't even existent when I got here. So it was cool that us three and with the help of Rob and some of the loan consultants to put this position together. I think the main goal was, number one, to continue to educate me, to get me up to speed with where you guys are at. Not that that'll ever happen, but at the same time, to buy back y'all's time as owners of the company, right? You guys have other responsibilities. So now for me, it started with just spending a couple weekends reviewing everybody else's files and just asking you questions on the files. I was just trying to take it all in and see other files besides my own, just get double and triple the reps.
Yep.
Being able to see Enrique's deals, y'all's deals, and Kyle's deals. Like I was just taking in a lot, which was great. But now I'm doing that preliminary underwriting so I can go in the third-party software that we use and run some comparables and try to just grab some data to support the loan consultant in their presentation to get a loan funded to underwriting. But then also point out a couple of things maybe that they missed. Because there's plenty of things that I miss on my files as well.
Just a second set of eyes.
Yeah, second set of eyes,
valuable.
which we certainly all need. So I think that's the vision now. It's just chop up those deals, point out a couple of items that they may have missed, give them another perspective, and just try to shape the deal in a way that it's best represented to our underwriting team.
And how do you think going through getting all those reps, how does it affected your sales pitch, and how do you attack your files personally? Because you're not just doing everyone else's files, you have your own personal files as well.
Yeah, I think it's changed a lot. And what it's really changed is the questions that I'm asking up front. Okay. And I've really taken pride in trying to be overly transparent with potential borrowers because a lot of people are uneducated on the process. We see a lot of people.
Private company too, so to fair to them, every hard money lender has their own process too.
Yeah.
So you're exactly right.
Yeah, I think some people are uneducated and a little bit standoffish. They certainly call in a little bit nervous. Maybe it was their first time. If it's not an experienced investor, real estate's not cheap. We all know that. Right. So there's a lot at risk.
Yeah, a lot of capital.
So I think my approach is just really leaning in and explaining the process to somebody, being able to answer all of their questions. And not that I have all the answers, but I have you guys. Right. So I can come to you guys. I will let that client know that I will go and get the answer. So I think to your question, Caleb, transparency and then asking a ton of questions, just trying to gather as much information that I can on that initial call.
Yeah,
that's the
really
best way that has worked for me personally.
That's really good. I think also then we can kind of chat about, that why, these second set of eyes and our underwriting process and how one file makes its way to the underwriting table. Why DKC lending's different and why we feel our process is very valuable for a borrower. Yeah. So, I mean, why don't you, Caleb, just give us a little overview of what that process looks like? As we know from just this conversation, there's a loan consultant, there's a sales manager, there's our chief of sales. So what does that look like from a files perspective?
From the files perspective, from
borrower,
borrower perspective, is having a second set of eyes really helps from errors, right? And then it also not even only helps from errors, but it helps us really see what the borrower's seeing. Because, just because I have a perspective doesn't mean it's the right one.
Sure.
Right? Just because Austin or you, same thing. So for us to have multiple eyes just looks for imperfections and then looks for bigger positives that we can highlight.
Yeah.
And then I would really say it helps us keep everyone in check. We all learn from each other. Right. And it's not just about one individual calling all the shots. It's about all of us educating each other of why these scenarios are beneficial for the business, for the borrowers, and for our investors.
Yeah.
So I would actually parlay that to with you and us when we were designing the company, why we wanted LCs and everyone wearing multiple hats.
Yeah.
The importance of that.
Yeah. And, as small team, as we've grown, and, we talked about Austin's journey. I know we've had Enrique on talking about his journey, but, he's been in servicing before, processing. Mike has been in servicing, processing, sales. I mean, Kyle is, a hybrid of sales and servicing as well. So it allows them to kind of see the big picture of the lifespan of a loan, not just when the loan closes and it goes away, because it doesn't go away. It stays on our portfolio. We service everything in-house. So, we're servicing these loans from application to maturity.
Right.
But I think on the underwriting side, to your point, the collaboration of the team on each file, we really have like five individuals at any given time looking at one file, which I think is really important too. You have, if Enrique is fielding the initial call, let's say, and he's working the file up front and collecting the information, then you have Austin's perspective to maybe ask one or two more questions or provide a different perspective. Then it hits your desk as chief sales and you're providing your input. At the same time, Marta, our loan processor, is reviewing the file and maybe asking title and insurance questions that, maybe our sales team, not that we overlooked it, but we're focusing on structuring the deal. And so,
absolutely.
Right now we have a file that Marta's running point on the insurance just because, they're like switching from a homesteaded property to an investment property, and they have insurance that will shift and they have an open claim. So like, what does that look like on that? So you're getting 4 or 5 different opinions and perspectives on any given file, which I think is really important for a borrower.
Yeah. And I also think it lets us protect each other and the borrower, because when one person can see what can happen in 8 months down the road for maybe a code violation or something happening, maybe I didn't see it or maybe Austin didn't see it, but then maybe you see it. So, we can all take the time, because we also remember we're human, right? Like, we don't always have great days. Some days you're a little bit off and maybe you don't see something. So
or you're busy doing other things, when you're working, I know we'll get to extensions, but I know you're working extensions. There's different parts of the month that are heavier on that. I know for us, we're working collections at a heavier percentage of the month, in the beginning. Yeah. So depending on what your workload is too, or like you said, we're people and we have, things going on in our personal lives. So I think that's just why, you're getting a consistent process when you have 5 different eyes coming through with different perspectives. Yeah. You're getting a consistent outcome also.
And we get a lot of work. It makes us respect each other a lot more. Before, especially me personally, coming from the conventional world, and all I cared about was driving business. That was like my job. And to a degree, that's a lot of my job now too. But all I cared about was volume, more volume. It's like every month, was that enough? No more. But then when you get into another department and you see how hard it is to collect the dollar, what the borrower's going through to make their payments, how construction can get delayed, how underwriting has to look at multifacets, and it's not just about, the asset, LTV, whatever it might be. But, and then even the cold call, when you're just trying to get the person engaged with you enough to get the sale done. So, when Martha's processing and she has, obstacles with title companies, but getting to see each obstacle and each success in each department helps us, one, respect each other more, and then also helps us aid each other to be more successful in the department.
Yeah.
So.
I mean, because you're not that you're newer, but you have, only a couple of years in the business, and you did spend time in servicing as well. And you've helped us with collections, and now you're handling loan extensions. How has that affected your questions up front?
Yeah, it certainly has. I mean, not that we all enjoy the servicing side, especially me.
I love it.
Especially me as a sales guy. I want to do the initial sale. I want to help somebody achieve their goal and get it done, and then hopefully move on and help somebody else. But at the end of the day, we're a smaller team, strong team, and we have to assist with the servicing. So it's all hands on deck. It doesn't fall on just one person. And that has certainly changed, like I said, the way that I approach these files up front, the questions that I'm asking, the documents that I'm requesting as well, to make sure that I feel really good about an opportunity before I send it over to Caleb. Because it's no one else's responsibility. It is going to come back to me, and I'll be more than willing to pick up the phone and dig into the servicing side of things if need be. But again, it goes back to the questions in the beginning.
I guess it sounds like collections obviously is a big one that we're all mentioning. Insurance, compliance, taxes, these things all matter as well. And we'll get to the extension portion, but from a collection standpoint, the cash flow and the ability to make payment is that how do you approach that from a sales perspective?
Yeah. The way for me, I always tell the client I want to ensure that the property is cash flowing over the amount of the interest payment, right? We always say, like, not that we have a DSCR loan product in house, but we want to see that the property is cash flowing. So that's certainly what I look for. If it's not, because it's,
New
let's say,
construction
new
or-
construction, well, how are you going to make those payments? I'm asking those questions, and not that we require them, but I'm looking out for the client.
Yeah.
And then on the back end, I'm also looking out for us and our servicing. But I want to make sure that the client's going to be successful. We do not want the client to get stuck in the midst of a new construction project. That does
Right.
not help any of us here.
Absolutely. And that's an important point because it's like we don't require bank statements, liquidity, or, interest reserves like a lot of institutional lenders do. But we do ask the questions. To your point, we're a relationship business. If the borrower fails, we fail, and it's not. We're here to help clients achieve their goals and collect multiple deals with them and have them grow their business, not, in a default or a foreclosure, stunts anybody's growth. So like new construction, we're not going to ask them for the bank reserves, but, we want to actually make sure they're thinking about those types of things.
Of course.
And so that's a really, really good point.
And Dave, why would you, for the borrower specifically, what do you think the importance is when we were designing DKC for us to parallel with the servicing and everything for our borrowers? Has it made the relationship better, or would you say it's better for us to be more of a revenue driver just to get them in and out?
Yeah, I think there's a lot of financial reasons behind, managing the capital internally as well. So like there's certainly financial resources that are from a capital perspective and maintaining relationships with our investor base. But then obviously from the borrower side, you get to, when you're collecting the interest payments monthly and handling insurance and taxes and loan extensions internally, you get a pulse on the market. Number one, we understand the market. I feel like we have a really good perspective on the market, closing hundreds of deals per year, and understanding the challenges and pitfalls that these deals have on the front end. And then you're also getting to touch the client regularly, so you can understand if they have any other deals that you may be able to help them with. And so the client relationship, I think, gets stronger with the lender.
Yeah.
Also we want borrowers to grow with us, and so to come back for multiple deals. So if you close the deal, send it off to the institutional lender, and you broker the deal.
Right.
You may not even know if they have another deal, or if they're going through a delinquency, or if they're having some sort of financial issue, or if they have another deal that they want you to fund.
Right. And then growing in that way, I would definitely think that affects underwriting, because I believe we learn more about the borrower. So then the next time around, it maybe gets easier or harder, or what would you say?
Yeah. That's a great question. I mean, repeat clients, it's such an easier process of approval when you have that payment history. And that's what I say is like, we can always try to improve terms for you, but take a loan, pay the loan off, show a successful track record, and give the money back, and that goes a long way on the secondary underwriting, because, there's several borrowers, especially, I can cite a couple in new construction and fix and flip, or honestly, we have quite a few borrowers that have big portfolios that just collateralize the same property over and over again. And sometimes it's like, you don't even need to look that. I mean, obviously we're re-underwriting each file, but I mean, we know their track record, we know their ability to pay, and we know their character.
Right.
Because this is a relationship business at the end of the day.
Right. Because we still are asset-backed lenders, right?
We're asset-backed lenders, and it's and so when I say character relationship, though, it's like, we want to know that you want to do the right thing and that you have aspirations to grow and pay the loan off, right? Because there's, in this industry, there are scammers out there as well.
Yeah.
And so we have to protect ourselves from those. And once we know you're a viable real estate operator, it goes a long way in underwriting.
Yeah. Well, Austin, I wanted to ask you, now that you've, had some experience and you're seasoned, not only in just sales, because you have a background in sales, but would you have changed going into other departments, or would you have strictly focused on sales, or would you say you've made the right decision in the way that our philosophy and having the understanding of every department?
Yeah, I think having the understanding of every department is super important, because I'm on the front lines, taking those initial sales calls, and I know what could potentially happen in servicing. So I think it is important to understand as many aspects of our business as you can. I couldn't imagine, now that I think about it, just taking those initial calls and then passing it off and just continuing to do that, because I value the relationship, especially knowing the fact that we're out there. I'm going to a couple networking events a month, trying to meet up with potential brokers, realtors who could refer business, potential clients, that relationship is important. And if you're only just taking 1 or 2 calls with them up front and then never speaking with them again, how are you really going to build that relationship? So
And grow your portfolio. Yeah.
I was actually the same way when I wanted to work in sports as well. I worked for a super small arena football team, and then I decided that I wanted to work in the XFL rather than just like a massive team in the NBA, NHL, MLB, MLS, because I wanted to try to understand all aspects of the business and just to see maybe I would become more interested in something rather than being an account executive or selling season tickets. Maybe I wanted to do sponsorships, or maybe I wanted to do something else, social media for these teams. Like, I didn't know, but there's only one way for me to find out, is like get in a smaller office and be able to see all the other
Well, there's no doubt that your personality is well equipped for sales. So I think you landed well there.
Yeah.
All right. So, I mean, let's transition to loan extensions, because I think that's a big topic.
Yeah.
I mean, from a market perspective, we've certainly seen an uptick in loan extension requests. You know, we have 1-year hard money bridge loans.
Yep.
We've seen a significant percentage of our portfolio request extensions for either six months or 12 months. You know, I can kind of speak to some of the market conditions. I mean, last year it was high rates, you know, so somebody with a 1-year 12% loan is, you know, has more flexibility than locking in a 30-year 9% interest rate AM schedule type loan. So like that was certainly true. You know, the qualifications for the bank financing, very restrictive. A lot of the, you know, appraisals came in lower than they expected. So, you know, borrowers had to put more cash down. They're deciphering whether they want to sell or keep the property. I mean, even right now, you can speak to this as well, but the sales of assets, they take a little bit longer than you anticipated. So, you know, things might sit on the market longer as you try to find the right price point. So, you know, extensions are really important to us, and we are always kind of, you know, we're trying to look out for the borrower and do the best interest of the borrower. So we are not, you know, denying loan extensions as long as they've been in compliance. So I think there's a lot of lenders out there that do not offer loan extensions no matter what the circumstances are. And fair enough, they all have their own business model, but they do say, because we refinance several of them, where it's like you've reached your maturity date and you now need to pay off your full loan balance. And when you aren't ready to achieve your refi and you don't want to sell the property, what do? You have to refinance with another hard money lender or sell. And a lot of times they file a foreclosure on them or a default, and now you have an active foreclosure filing, and it's like a short sale type of refi, which is hard. I mean, you got to go to a hard money lender for that.
Right.
So we offer extensions to all of our borrowers as long as they've been in compliance. If you make your interest payments, your insurance is intact, and you pay your tax bill annually, then we will offer loan extension terms to you.
Yeah.
And so, I mean, Austin, you lead the loan extension line. You're getting to these borrowers for 90 days before their maturity date to try to understand where they're at in the process. So why don't you just kind of speak to, what that looks like? So you're hitting them up on 90 days and you're saying, what are you saying at that point?
Yeah. We do a 90-day notice, a 60-day notice, and a 45-day notice. So we're really trying to touch the client a couple different times before the loan maturity date, just to let them know we're here to help.
Yep. What are some of the questions you're asking at that point?
One of the bigger ones is, what's your current credit score? Is the property currently rented? What is your exit strategy? Do you plan? I can look this up, of course, if the property's listed online.
Yep.
Do you have intentions to sell the property? Are you trying to hold this long term? Let's look at a 30-year product, if so.
Yep.
But if your credit's not in the best of places, are you requesting a loan extension? If so, let's grab all the documentation that we need. Let's get another inspection. Let's fill out a short questionnaire so that we know exactly what's going on and why you need the extension. But for me, if I can help somebody refinance into a long-term loan product, or maybe connect them with a realtor that we've worked with in the past.
Or the broker that referred them to us often will be trying to achieve the refinance for them. And so we're kind of talking with the broker. If they don't have one, we can facilitate the refinance, as you mentioned.
We spoke about that the other day. There's plenty of mortgage brokers, licensed mortgage brokers that refer business to us. And 90 days until that maturity date, we want to reach out to that broker. Hey, just so you know, the client that you referred to us, they're hoping to refinance. And now they have their credit score in a great place, 720 credit. The property's cash flowing. They did a beautiful renovation. Take it. Run with it, because you did us a favor. You sent the loan over here. You helped your client out. Now it's your turn to take care of them.
Yeah.
And that always keeps them coming back. Our brokers really do appreciate that.
Yeah. And if they're not ready, to your point, that's when we'll assess, extension terms, and we'll either offer 6 or 12 months, depending on where they're at in that process.
Yeah.
But these refinances, especially on the DSCR in today's market, I mean, they're taking anywhere from 30 to 45 days, right? I mean,
absolutely.
I mean, 21 days would be really impressive. These days, you got to have everything buttoned up, ready to go. But
yeah, everyone says that we'll get it done in 10 days, 15 days, but that rarely ever happens.
Yeah, the credit, like you said, is a big one. And so we have like credit repair companies we work with, because a lot of times credit is the biggest barrier, especially if they have an appraisal already. A lot of times, they're like, no, we're going to pay off as well, or we're going to refinance. Yeah. And then they get the appraisal, they get through, and they get denied in final underwriting stages. Yeah. And then back to like other scenarios, if it's another lender at that point, you're in foreclosure. Right. So we're allowing them, we'll give them 30 days after the maturity date. And if they're, unable to achieve it at that point, now you've had 30 extra days past the maturity, you've had 13 months, and you're still unable to achieve it, you need to extend this loan and come into compliance, and we'll continue to help assist you get through that process, right?
Yeah, that would beg me to ask you this question is, what truly are the dangers of these extensions, since so many lenders have such a, rigid policy of 3 months or 6 months? That's it. We're not going to extend under the circumstances, no matter what. This is what we're going to do. So what's so dangerous about extensions that?
Yeah, statistically, if somebody borrows a 1-year bridge loan and they are unable to pay the loan off after 1 year, statistically, there's a higher percentage of a default risk at that point. Okay. There's a lot of caveats and a lot of narratives that make sense. And that's why we try to be really practical lenders and understand the specific scenario that they're going through. But, it's statistically, that's true. Your risk is higher. Why didn't you pay off? You took a 1-year loan and you were supposed to pay off. Why didn't you? Because you were unable to achieve refi, because you didn't complete your project in time, because you didn't get your credit repaired, because you weren't able to sell the property. That technically means you were unable to achieve the outcome that you initially had planned. So therefore, the risk increases.
Right.
That's the real answer why other lenders do not. So we try to take a more practical approach and say, hey, why didn't you? And if you didn't and you still have the right intentions, fair enough. Let's help you get the right outcome. But we do re-underwrite the loans at that time.
And I think that's actually really important for people to understand. It is a re-underwriting.
Yeah, absolutely.
It's not just, okay, we just take it for what it was a year ago. How would you say, has there been massively drastic changes in the market in these 1-year bridges? Because people think, it's 1 year, it's no big deal, it's not that much time.
Yeah.
But what would you say to people that are saying, it's not a big deal, but it's been a year? Like, what can happen in a year?
Yeah, well, we've seen from a market perspective, we've seen 10, 15% in certain markets, depending on the asset class, maybe even more from a value standpoint, but also the condition, right? I mean, also most of the leases are 12 months. So if it was rented, the lease might have been up. It might have been renewed. Who knows what happened. It might be vacancy now from the cash flow. Maybe you increase the rent. Great. Maybe there's no tenant in place and you're remodeling to increase rent. There could be a number. And even, we had a hurricane. So we've seen a couple of recent borrowers who did have occupancy. Now, they go for the extension and the drywall's gutted and there's no tenants in place. But they have an insurance claim check,
It's a good opportunity to offer our assistance as well. I mean, we're here. We're local in the Tampa Bay area. If somebody was affected by the hurricane and they want to extend their loan, who's performing the work? We can refer you somebody. We're trying to connect the dots all over the place. We want to be able to help these clients. Yep. And yes, we're seeing more extensions due to the market. But let's face it, some of it has to do with the hurricane too.
Oh yeah.
So we're here to help, and we want to be able to steer them in the right direction.
That's a great point. We had a borrower who had a $30,000 roof bid that we felt like we could help just refer them to somebody who could get it done for closer to 15, 20 grand. So, we do try to refer even subcontractors at times when we can.
Yeah. So in the extension process, what would you say, how important is it for the narrative from the origination of the loan that they execute to completion? How important is that component in an extension? It's like percentage wise, like what if they come to you and they say, okay, I only completed 10%, or they didn't do anything in a year's time? Because we've had that.
It's hard to answer that. I think it's always about the narrative, the narrative needs to make sense. And like we've had borrowers who are going on this, we were just talking about this offline where, a borrower is going for a second extension. Right. So it was originated in 22, and go for the second extension. Well, they had some personal issues. They had real personal issues that could be verified, and so they didn't touch the project at all in the first year.
Right.
Nothing. But they never missed an interest payment. They kept everything in compliance, but they had real personal issues that didn't allow them to execute on the plan. Most lenders, I think, would stop right there.
Right.
Second year, they got a red tag on the property. That's technically an event of default because now you have a superior lien and you didn't pull the proper permits, perhaps. So like that could be really frowned upon as well for a lender. Yeah. But if you came, and he came with a plan, a permit, a GC to remedy the situation, and show that you're on the right path to fix the issue. Fair enough. We're going to watch that file very closely, and again, timely paying client narrative made sense. So we're allowing another extension. To us, this client too has multiple deals. They've shown a track record in other properties. So it was, if you have multiple properties and you have a personal event and a red tag, but you were able to move other properties that are on our books, but not this one, we kind of take everything into consideration. So that's just a unique story right there. But I think every deal is different.
Right. Okay. So, Austin, how would you say with the extensions, have you been able to manage that in sales? Because yet again, we're saying multiple team members are wearing multiple hats. An extension is a separate department from the origination of the loan. Yeah. How have you been able to manage your time and grow to 100% compliance and extensions and grow your origination? Because remember, we believe in the growth philosophy.
I wish it was 100% compliance, but yes.
Nice one. As best as you can.
Nice one. 100% of him following protocol.
Right, there you go.
I call on the team when I need, right? So I know that this team is here to help me. Yes, I manage the extensions for the company. But if I'm struggling to get in touch with a client, maybe they've never heard from me before, I might ask Enrique for an introduction to that client. Or we have some Spanish-speaking borrowers. Unfortunately, I didn't pay great attention in Spanish class growing up, so I'm not fluent. And Enrique or Marta can assist us. So I definitely lean on the team. Again, I know I manage the process, but I call on the team quite a bit.
Great.
And yeah, being able to originate loans and manage the extensions can be difficult at times. I know I came into your office yesterday at 4:30 and said I was heading out. And then I sent you guys a video closer to 7 p.m. because I just got into the extensions and people were available after work to have conversations. To your point, it's really all about the narrative. Just talk to us. I know for some people it can be hard to open up and tell us the truth, but we do need the truth. We really need that narrative to make sense. We're more than willing to offer the extension, like you just said, but allow it to make sense. Just tell us everything. Over communicate, and we talk about that quite a bit.
I love that, and I think it does make sense because, like we said, most lenders don't offer extensions. So the minute they open up to some lenders, it could backfire on them. We're not one of those lenders. That's why we're here talking about it and trying to educate our borrowers to say, we're not those guys.
Yeah.
So I think that's a really important point.
Yeah, not many people are willing to come to you and tell you about their personal issues. They're trying to keep that close. Yeah. They don't think you care. We absolutely do. Like I said, we're here to help in any way that we can. Let us know what's going on. You don't have to get into all the details, but we get it. Things happen. Things have happened to all of us, and that's just part of it.
Yeah, love it.
Yeah, one of the things too is cost and time. Right, I get this a lot from a lot of the bars when they call me and it's time to extend, and they're like, "Caleb, yeah, just extend it." Like at that line all the time, just extend it. And I go, "What do you mean, just extend it? Do you know the work that's entailed?" I said, "What could you tell people and borrowers of like what's the process truly like? What's actually happening?" Piece by piece and moment by moment for an extension.
Great question.
Yeah, we spoke a little bit about it. We do have to re-underwrite the file completely. Right. We do need to reinspect the property. We do need to fill out that questionnaire. A lot can happen in a year. Right. Like you said, with the hurricane specifically down here in Florida, a lot can happen to the property. So we do have to go all the way through the way that we would when we originate a loan. It is the same process. We have to make sure that we're in a good position as a lender. And again, we're focused on the success of our client and to ensure that they're on point to hit what they initially told us was their exit strategy.
Yeah.
So it's a full underwriting process now.
Because we're an asset-backed lender, right?
Yeah. We're evaluating the asset. We're running our reports the same way that we do. So I think to answer your question, it's really the same. But we try to keep it as easy as possible.
Yeah, because obviously we have like all the entity documents and things like that. So we're just verifying. We don't have to engage a title company, which is great. But it's an inspection, absolutely, and then a re-underwriting of the narrative and the plan and what you've executed on thus far. And our inspections, I mean, you and Marta are phenomenal. We're getting inspections done in 24, 48 hours. We just need access, and so it can be very streamlined if you are communicating and responding. And then we're given terms quite quickly, and we're trying to get term sheets out with, 60, 90 days. So your understanding of what the cost is, because again, it's not, to your initial question, it's not free. You paid what you paid for a whole year. So to get another year, the cost is not, we try to discount the cost for the second year, but it's not free.
Absolutely. And I think it's important for borrowers, because when I get that call, I'm just like, okay, so you want me to do
extend me?
Yeah, just extend me and do exactly what you did the first time again, but this time barely, or don't make any money, or just be very just discount your time to the point that it's almost free. And I'm like, no, that's not how it works. And then also too, I guess going into the multiple hats, you get to see it from the investor side, who are literally investing capital, and they need their returns as well.
Absolutely, yeah, and they're understanding that the risk increases, with each extension, and so we have to combat that with strong narratives and data,
right?
And so our investors, we raise capital in this manner, so they're certainly understanding, and that's why we're able to do this. But the data and the narrative is what drives decision making here.
Absolutely.
So
it plays into the whole topic and the relationship topic that we've been discussing. A lot of the times when I speak with these clients about their loan extension, it's not the first time I'm speaking with them, because they've been communicating throughout the duration of their loan. So being tied into servicing with us as a smaller, tight-knit group, it's powerful.
Their payment history, their insurance history, and obviously you're checking property taxes is one of the things we didn't mention.
Yep.
You're checking the property tax status at that time. We're doing a desktop lien search to make sure there's no expired permits or open code violations, or they didn't place a second mortgage on the property, which would be a default under the mortgage. So those are things we're doing, but we're doing a lot of that internally. So we're keeping it very streamlined for the borrower.
We're assisting them with renewing their insurance. We're telling them exactly who they can go to. We're providing them with quotes. It's just part of the service. And Marta does a great job with that as the processor.
Yeah, I also think, when we've been going through a lot of the things, because I also get this question a lot, like I was saying about the time, but, people going into not sticking to the data, right? We are data driven. And I forget sometimes borrowers, they say, oh, I'm a good guy, or I've did this many loans, or, my family, it's all going to be okay. But how important it is to be aware of, our underwriting softwares and where the comparables are, where the percentage of completion, where you are sitting today versus tomorrow, the market conditions, how important in the underwriting process, whether extensions or the original underwriting, you think it is for the data?
Well, I could ask you I could reverse this question to you too, because, we're not here to, and we talk about this a lot, we're not here to tell you what your property is worth or isn't worth at times, and, technically if you're getting a real estate license, the definition of market value is what a buyer and seller are willing to agree on as a price. Right. And so we're not buying the property, nor are we selling it. So who are we to obviously there's an appraiser role, which we don't require appraisals. So we try to do our own internal evaluations, but an appraiser tries to get close to that. But we've talked about this before. We've seen wild appraisals that are very, off in our opinion. And actually they end up selling for a different price than the appraisal. So by definition, they're off,
right.
So what, how do you take that approach? And when you're speaking to a borrower and they're saying, my property's worth $300,000, and you don't want to tell them what it is or isn't, because who are we? We're not God.
Yeah, no, I think that really is the first most important thing is, we aren't the end all be all with the value. It can be different depending on the lens that you're looking, but I would say we lend at what we're comfortable lending, right? So we're going to give you the honest truth of where we feel is the best approach for you to be successful, where we feel comfortable, and what we're willing to do and execute at a high level.
Yep.
I think that's very important for people to understand, because, we're not here to set people up to not be successful. If you over leverage and you're carrying too high of a payment, you don't have the ability to pay, well, then I set you up for failure.
Yeah.
And then circling back to how we have all the departments and how we kind of all moonlight into each of them, that, setting people up for failure because we maybe over evaluate or whatever we might do would only hurt our next teammate.
Yeah.
You know,
Great point.
Because the ball just gets passed to the teammate that you're going to have to deal with later.
Absolutely.
So,
Especially on these extensions or payoffs, you know, when you can't receive a refinance or whatever.
exactly.
You'll see it on the office next door.
Yeah, exactly. So it doesn't go away. You know, it just doesn't go away. It'll come back and haunt you later. So I think that's also another big pro for us, is because we know we're going to give the honest opinion of where we feel comfortable. We see success in the project, which will then lead to our borrower, which then leads us to service it the proper way too.
I love it. That's great. All right. Well, I think we've covered extensions and got to meet Austin a little bit more, who will definitely be on again. Any final words you guys want to wrap up with?
No, I would say stay tuned to a lot more, meet with our team and stick with us to how DKC grows.
Yeah, absolutely. And drop any comments or questions that you guys have. We're happy to answer these in the next upcoming episodes. Thank you.
Yeah.
Thanks for tuning in to another episode of How to Make Money with Hard Money. Like, subscribe, and follow on all social media platforms. You can catch this episode on Apple Podcasts and YouTube.